Hey, good morning. Welcome back. Just touching back on CRM. CRM, we're still seeing a little bit of movement up to the upside. Originally, I had gotten into this play, I think it was about in the 220s. And as I had said in my previous video, that CRM was basically knocking on the door of 230 and basically looking to retrace back up to the 270 mark, or of course, even beyond. Now, we were going to see a little bit of a stalling at 240. We saw it, right? I said that in my last video that more than likely there was a little bit of resistance right here, and we could see a retracement back down to 230, which we kind of saw a little bit right here, but there wasn't enough selling pressure even to retest 230. We came as far down as 233, 234, but of course we did see that 240 basically, we saw some stalling right here at 240, right there on 2 days where the market tried to break above 240. We tried on this particular day on the 8th, couldn't do it. We tried again on the 9th, and then of course we had a little bit of a sell-off followed by a 2-day sell-off, and then of course following, now we're seeing a break above the 240 mark. We were up almost 2%. At one point we were up at 242s, and of course our next area of resistance, where if you're in this play, if you're in CRM, you should be looking for what looks like to be, I would say, probably about 250. More than likely, you're going to see a little bit of resistance around here. More than likely going to be around 250 to give it a little bit of wiggle room. That's where most likely I will look for some resistance. I would look for a little bit of a break above 240s. And the same thing, if you were looking to add a little bit more, I think I added like another $100 or something on the pullback. Not too much. I was hoping to get something a little bit closer to 230s, but unfortunately it just wasn't there. So we're just kind of letting the play ride out. I've got about 2,500 in the stock, and we're just basically letting that ride up to about 270, see if we get any break above 270. If not, we'll probably take profits and look for an opportunity for a pullback, probably around 250 to rebuy it. The other stock that I was going to cover was, of course, BABA. BABA, we saw areas of support where the stock previously, you can see it right here, I had called the 266 on the resistance side. We saw that right here, where for the most part could not break 266. And then of course on the retest, you see multiple days retesting 266s, and then on the opposite end we see multiple days again trying to break above 266. Not really getting the volume that I would like to see. Typically we're sticking around the normal volume of the average volume is about 17, 18. And for the most part, we're sitting on both days. We had a 13 million day followed by a 15 million day. So not really getting the big moves to the upside that I would typically look for, not seeing like really strong volume come in. I guess people are still a little bit skittish about Jack Ma. There's reports of him, he was out there playing golf, etc. And so markets basically tiptoeing in back into Alibaba. I like Alibaba because of course it is basically my China play. As we see, one, it was in a good spot to buy. It consolidated down here into the 230s, which is where I originally got in. And of course, we're sitting in almost 40, let's say about 40 points or so, just about 40 points in the money. I think we're up about 15% on the play, but basically going to let this one ride out, see if we retest more than likely our next area of resistance. But most likely it might be here at 280s. We're going to see some resistance here at 280. You should see where we supported and then resisted right here, right? You should be able to see that right here and as well over here. And then more than likely, this will be our next area of resistance, which will be at about $300, right? So our next area where we're more than likely going to see some pullback if we get a couple of strong days. More than likely, the stock is going to push through 270s. We're going to come up to that 280 mark, and then we're going to back off. So of course, it's those opportunities where the market backs off, especially if we get a bit of a correction. I'll use all of those corrections basically to add to CRM and to BABA. Those are the two plays that I'm basically going to be sticking with for upward, basically for growth. This will be a short-term play for me. I'm not exactly sure where the market is going to go, but technically speaking, on this particular play, these are the areas where you're going to look for 280s and then 300, and then after that, you know, who knows where the stock is going to go. Again, we'll probably see a little bit of resistance. Probably we have a lot of consolidation at 310, but we're not even there yet. But like I said, next area that you're going to look for, Baba is definitely going to be trading higher outside of any catalyst in the market. We could see a pullback in the market. One last thing that I did want to touch on, which we're currently seeing, looking at the Dow, right? Looking at the Dow for those who trade the Dow, or if you trade the S&P, the market is basically playing these levels to the T. We're seeing, again, support and resistance. That's why it's important to know your supports, not just in your particular stocks, but also in the market, whether you follow the S&P, the NASDAQ, or the Dow, so that you know where the market is basically going to bounce outside of any news or any narrative that will drive the market either to the downside or to the upside. Basically, the markets are going to test supports and they're going to push against resistances. And so that's basically what we're seeing right here. For the most part, you see the market could not break what looks, I figured this was 31,200. And then, of course, now we're inching our way back up to 31,500. In multiple days, we have 3 days where the market has retested 31,200, and so it is a strong area of support, because as you can see right here, we had multiple days where the market basically pushed up against 31,200. This right here is the anomaly in the market. This was the whole narrative of GME and hedge funds are having to sell out of their positions to cover their, their shorts for GME. This is just basically a shakeout, right? We just see a little bit of a shakeout. Some high volume came in, as you can see. We had some 560 mil, 530 mil, 465 million shares days. These are just basically shakeouts to get you to sell. Is this the correction? Is this the correction that we're looking for? Is this the sell-off? Is the market going to crash right here? And then, of course, the very next day, what happens? Right, we work our way right back up. So if you were not buying here, right, when everybody's panicking, you should not be panicking. When everybody is thinking that they should be getting out of their positions, you should be paying attention, making sure you have enough liquidity in your account to meet any margin calls, because this is the type of stuff that you're going to see going forward, just like here, right? Just like here. This was a bigger narrative, right? This is a bigger narrative. I say that as a nurse. This is a bigger narrative of a shakeout to get you to sell out of your shares. And so that's typically why when I buy companies, I buy the company, right? I'm not just buying the stock. Especially if it's something that you're playing for the long haul, I'll typically look for companies that have been around for a very long time. They've paid dividends for a very long time, or they're very strong companies, fiscally speaking, right? Not necessarily some of these companies like Tesla where they're cooking the books and, ridiculous valuations. I typically stay away from those for my long-term portfolio. Some people like them. I particularly stay away from them because in scenarios like this, you'll typically end up getting shaken out, as they'll have huge movements to the downside, because there's much more fear in most of those positions, especially in tech stocks, than there are in like long-term growth plays or in dividend stocks. You typically don't see all that much movement. For me, these stocks are particularly held for income, right? So looking over at the portfolio, we'll look at the portfolio on the long term. We see we're almost, I was hoping only to get to 60,000 by the end of the month. We're probably going to hit 70,000 in the account by the end of the month. Like I said, my goal for the long term is a minimum of $500 a month in cash flow, basically in dividends. We finally broke 1,000. We're at the 1161.73 in dividends so far. You can see for the month we've put in just about 250 in dividends. We're up 3,700 in the account, so the account's doing well. I can even say the same thing about my IRA. IRA looking solid. We're up almost 13 in the account. We've got about 5,000 invested. Basically just dripping this account every month. I just put in, every 2 weeks, I put in X amount of dollars and I just kind of let it buy. I've got a lot of different stocks that I'm very confident in. A little bit of risk, but overwhelmingly most of these positions are going to do well regardless of a correction or not. So that's basically going to be it. We're doing quite well. Like I said, for the quarter, we're doing really well. Didn't have too bad of a down day, down 218, but thankfully we had almost $83 in dividends for just one day. So this is a good way to build up some passive income. I keep track of my passive income here. You can see what my dividend yield is from my account. And again, my goal for the year is to get this to my goal for the year is to get this to 500 in passive income. So that's going to be roughly 6,000 in annual income. That's my goal for the year. Hopefully we're going to hit that. Again, we're a little bit higher. I basically only make adjustments to this typically once a month, as I typically add to my portfolio probably like every week at least. Or when I see pullbacks, I add to my portfolio where I think, even if it's just, you know, $100, if I see a decent pullback and I want to add a little bit to a certain play, or if I feel a certain play is being pushed down too hard, I'll typically start to buy into it, because I know eventually we're going to compress and then come back up to the upside. Like, for example, like we saw in like Walgreens was pushed down. BGS was another one where stock was being pushed down. Quite a few of these plays. IBM is another one, right? IBM popping out, looking to see if we're going to break back into those 130s. Got a decent dividend for the price that I got in. I bought in down here at 118s. So we'll have to wait and see if IBM does its thing. But that's basically going to be it. I'm not going to keep this video too long. Appreciate you guys watching, and I'll check you out next time.